Welcome Deepan Mehta, who is joining us on the show right now, and even Naresh Mirani is also here with us. Very good afternoon, gentlemen. Thank you so much for your time. And Deepan, first up, very happy new year to you and your entire team. But help us with your take on the fertilizer counters. How do you see this hike coming? And any stock that you like will be the biggest beneficiary of this hike, which is now seen to be getting an approval from the cabinet?
Yeah, good afternoon, and thank you for your best wishes for the new year and happy new year to the entire team at ET Now and all your viewers. It's going to be a great year. Coming to your question about subsidy increase, I think it's much needed because the soil composition also needs the adequate amount of DAP and other phosphatic fertilizers. Obviously, the biggest beneficiary of this is going to be Coromandel International, which is India's largest DAP and phosphatic fertilizer manufacturer. And I think it's a step in the right direction. Generally, I think that fertilizer companies are not created great value. They are great trading opportunities because of a lot of government interference and the effect that monsoon has on their sales. But by and large, I think within the entire space, we are quite positive on Coromandel International. And that's one company which has scaled up its business well. And the most important thing in the DAP business is backward linkage to get the right kind of raw material because those are generally in short supply and a lot of price volatility is there in those raw material costs as well, which Coromandel has been working on.
All right, that's the take coming in on the fertilizer counters. But sticking with this big story, let's get in more details as we have been telling you that the Union Cabinet today has approved the higher subsidy for DAP. Let's get in more details on this one from our colleague Prakash Priyadarshi, who is joining us right now. Prakash?
The Indian Cabinet meeting has concluded and we are learning from our sources that the two important decisions have been taken. The first one is with regard to fertilizer sector, where it has been decided to provide additional subsidy amount to the companies for the procurement of DAP. A very significant development coming in. As you are aware that the DAP prices have increased significantly in the international market for quite some time on back of multiple reasons, of course, due to disturbance on the routes and weakening of rupees against dollar. And therefore, companies have been requesting government to either allow them to increase prices in the domestic market or increase subsidy amount. Therefore, taking all these factors into account, the government has decided to increase subsidy amount in order to offset the hike in prices in the international market. Of course, this decision will benefit farmers as well as companies. You're given to understand that the government has decided to increase subsidy amount by rupees 150 to 200 per bag. Along with that, we also given to understand that the government has decided to extend PM Kisan Fasal Bima Yojana with some modalities where it has been decided to provide some relaxation to the farmers to get maximum benefit of this scheme. Back to you.
Okay, thank you so much. That's my colleague Prakash just confirming that story. In the meantime, let's just try and understand what the market construct today is looking like. Some of those auto names are making a bounce up. There's L&T, Bajaj Finance, Adani names are looking good. Even Eicher actually, after a weak start and reacting to its monthly sales data, it's managed to showcase quite a bit of recovery. There's Tata Motors also holding up in the green. Axis, HDFC Bank. It's looking like a lively market for sure. But Deepan, hi, good to be speaking with you as always and wish you once again a very prosperous and healthy 2025. Tell me, what are the sectors to bet on for the year ahead, or do you think it's going to be much more stock specific than the latter part of 2024 for us?
Yeah, good afternoon and happy new year to you as well. I think the first half of 2025, the first quarter will be quite challenging. There are two major events in our opinion. One is the Trump presidency and how they are going to react and make changes in the first few weeks of their presidency. That's going to drive a lot of global flows, global markets. So we need to be very attentive of what is happening over there and what impact it has on our economy and our companies. That is point number one. And secondly, an earnings season will start pretty much soon in a couple of weeks or so. And towards end of January, early February, we'll have a clear-cut idea as to how the most important quarter, in my opinion, of the year, the one which has the festive and the marriage season, how that has played out for consumption stocks. So I think these are two important events or trends to look out for in 2025. And all I can say is let's hope for the best because Last quarter was pretty disappointing, September quarter that is. And let us see if there's a mild turnaround in December quarter or the continuation of September quarter. And that actually will determine the trend for the market. I think the market at present is on a, like, it can go either which ways. It can rally back up to its all-time highs or correct further from these levels. And it's just waiting for corporate numbers and what is happening in the US on Trump presidency to decide which way to move.
In fact, just this morning we were chatting with Nilesh Shah from Envision Capital as well. He's been tracking IT as a sector whole hog for many years now. And here's what he has to tell us about not just IT, wherein he believes that it's actually time to move out from the large cap IT plays and, you know, stay put with the mid cap IT names, the more niche companies. And at the same time, he talks about as to how staples is not really the go-to sector right now, but the premiumization trend when it comes to consumption is definitely here to stay.
There are better opportunities even within the IT services or in the overall IT space itself, which you need to look out for. So you have the tier 2 companies which are into ER&D, okay, companies which are product companies on the BFSI side, the banking, financial services, which are essentially either having products or have partnered with hyperscalers to implement their products for the Fortune 500 companies. That's really the segment to focus on. Yeah, I mean, there'll be companies who are going to now implement AI solutions for Fortune 500 companies. That's really the space to be. And because these are smaller companies, for them, any shift in IT spending will mean a lot. Versus that for the big guys who are already multi-billion-dollar companies, any shift in spending will not be material for them. It won't move the needle. The growth in the BPC segment has been a tad lower, and especially in terms of the outlook. The outlook is not as strong as what one expected it to be, but I still believe that's a short-term phenomena. It's a bit of increasing competitive intensity. A lot of the private players, smaller players who are well-funded are pretty much out there splurging in terms of their spending on advertising and customer acquisition, which is impacting margins, impacting growth for the leaders. Second is channel mix. Clearly, many of them have relied on the general trade segment versus that quick commerce has essentially come in and pretty much stolen the thunder. And I think most of these product companies are trying to adjust or readjust themselves. Even I think modern trade on the offline side has been struggling and finding it difficult to cope with the competitive onslaught of the quick commerce space. So that's in turn impacting the product companies. So I think it's a bit of several things playing out, but I probably think maybe 2 or 3 quarters from now, they should be back onto a strong wicket.
All right, so that was Nilesh Shah's take on the select counters and sectors as well. But with this, it's time to slip into a very short break. Viewers, don't go anywhere. We'll be right back.
If you like this video, then like, share and subscribe to ET Now.